I would like to give you some help with solving homework problems for chapter 11. It's the last four problems. It's numbers 11, 12, 13, 14, and 15, the last five problems. So it's actually one problem, 11-4A. So it's problem 11-4A. And there are five questions, so each question is separated as a separate problem in your homework. This is number 11, 12, 13, 14, 15. I'm going to solve a very similar problem but set B, so it's set up in the same manner, just has different amounts, okay? So we have equity sections right here, you can see, for the beginning of the year and for the end of the year. So things have happened in between January 1st and December 31st. You can see common stock. We had 17 shares issued and outstanding, so we did not have treasury stock. We did not buy back any shares. And during the year, you can see we issued more shares, right? 17 to 19. And 1,000 shares in treasury means we have these shares in treasury. We bought them back. So we took them out of circulation. So therefore, outstanding shares would be 18. We've issued 19, bought back 1. The difference is how many shares are out there, outstanding. And also we can see here that these 1,000 shares that we bought them for $40,000 right here. Treasury stock, we subtract. It's the contra equity account. Also, it's mentioned right here. So right away, we can answer this question, question number 4. What is the per share cost of the treasury stock purchased? So we bought 1,000 shares and we paid $40,000 for them. So we take $40,000. So that's question number 4. So total amount paid is $40,000 and shares purchased is one we're going to divide by 1,000 shares that we bought. So cost per share is $40. That's your answer for question, this part 4. So this is like question 14. Okay. Next thing here, so I'm going back to the problem, is the all these transactions happen. So you can see that 4 times a year, February 15th, and then let me highlight it, and then May 15th, same transaction. We're declaring cash dividend, and then August 15th, and then November 15th, right? So all of these are same transaction. We declare 40 cents per share, but the number of share changes, right? So March 2nd, we bought that treasury stock, right? The 1,000 shares we just talked about. And October 4th, we're declaring stock dividend, which is a different thing than cash dividend. And October 20th, we're issuing the stock dividend. So the number of shares changes, right? So the first question is how many common shares are outstanding on each cash dividend date? These are 4 dates. February 15th, so there is a table, nice table, let me make it a little bigger. So these are 4 dates when we declare cash dividend. And beginning balance, we just take from January 1st, right here, 17,000 shares, right? So issued and outstanding. So I'm going to put 17,000 shares right here. And then, guys, on May 15th, so 17,000 I'll actually copy into each date as the beginning balance. And then treasury stock we bought on March 2nd, so it doesn't impact February 15th, but starting from May 15th, we have to subtract 1,000 shares, right? So then it would be 16 outstanding shares. And then dividend shares on October 4th, so it will impact the last date, November 15th. So here we have to figure out, the problem tells you that on October 4th, we declared 12.5%. So this is a small stock dividend described in your book. So it's 12.5% of how many shares did we have? So right here we had 16,000 shares on August 15th and nothing changed. So on October 4th we also had 16,000 shares, right? So I'm going to multiply it by 16,000 shares, and that gives me the number of additional stock dividend of 2,000 shares. So that goes right here. I'm going to add 2,000, okay? And then we're gonna have with you totals. So February 15th, we have 17,000 shares. And May 15th, we have 16,000 shares. And November 15th, we have 18,000 shares. By the way, I already mentioned it. It should make total sense because if I go back to the end of the year, 19,000 minus treasury gives you 18. And that's what I have right here, 18,000 shares. Okay, so this is question number 1. Number of shares. In question number 2, the problem asks you, what is the total dollar amount for each of these 4 cash dividends? So very simple. I take the number of shares from right here. So I'm just going to copy this. I guess I don't need the double underlines, right? Oops, something with the format. All right, and then I'm going to, I don't need underline at all. And I'm going to multiply it by 40 cents, right? Each one of them. The problem tells you that 40 cents, 40 cents, 40 cents. So really straightforward here. Let me copy and paste. So total dividend, this is in dollars, right? So part number 1 was a number of shares. Part number 2, question number 2, the amount, 6,800 and 6,400 on both dates, May 15th and August 15th, and then November 15th, it's 7,200 shares. Okay, got it. Question number 3 sounds very fancy but very straightforward. What is the amount of retained earnings transferred to paid-in capital accounts capitalized for the stock dividend? So what they're asking here, what is the amount of when we issued this declared and then issued the stock dividend? How much was moved, capitalized from retained earnings into paid-in capital? So we're capitalizing. So we already calculated the number of shares, right here, 12.5%. That was 2,000 shares. So number of shares, 2,000 shares. We issued additional as stock dividend. Market value should be given to you right here, $42. So we multiply the number of shares issued as share dividend, stock dividend, and we multiply it by the market price on that date, which is $42. We multiply both. So we can say here we multiply. So we get the answer, $84,000. By the way, the textbook gives you like check figures, I think, right here. All right, we already answered question number 4, and the last one we have to answer question number 5. So we have to figure out net income for the company. This is the way I think about it. So we need to figure out net income. Let me make it a little bigger. Right here. Okay. I'm going to take difference in retained earnings. So I'm going to take retained earnings for December 31st minus retained earnings. This is how I think about it. There are different ways of calculating retained earnings because net income is added into retained earnings. So let me say from the end of the year to the beginning of the year, right? So how much has it increased? So I'm going to take retained earnings from the end of the year. Where are you? Right here. 295, 200. So I'm going to put 295, 200 minus retained earnings from the beginning of the year, which is right here, 270. Okay, so the amount of retained earnings increased by $25,200. And then I'm going to take this $25,200 and I have to add back all dividends. I have to add back, so all cash dividends, because I pay cash dividends out of net income that we made. And so I'm just going to take these amounts from number 2, 6,800, 6,400, 64, 7,200. I'm going to add them back in. So 6,800 and then 6,400. I'm adding back in because net income is earned, and then I subtract cash dividends. Now I have to reinstate what net income was, so I'm adding them back. 64 twice 2 dates, and then the last date is, I think, 7,200. And also I need to add back the stock dividend, this $84,000. So this is stock dividend, $84,000. I think that's it. So let's calculate net income. If we're gonna add it together, and we're gonna get with you 136,000, and that's the answer. All right, so I hope it's helpful. Again, you have problems 11, 12, 13, 14, 15, these 5 parts with just different amounts, but exactly the same idea. Good luck.